What informed the decision of the MPC today to just keep rates unchanged?
Thank you so much. Good afternoon, listeners. We had a meeting of the Monetary Policy Committee of the Bank of Namibia yesterday, and today we announced the decision to the public. We had a comprehensive review, deliberated on a comprehensive review of the international and global and domestic economic developments, taking into account all the key indicators that we need to look into when we are taking such a decision. What we noted is that the global economic recovery, it's very fragile. Things are getting more tougher and tougher. I think the reason for that is because of some key factors. For instance, one of the key one is the euro area debt crisis, sovereign debt crisis. We are also seeing a weak consumer spending, and also export has been declining in these countries. We have also noted a huge supply disruption originating from Japan. We know that Japan is one of the third largest economy in the world. So these are some of the factors, certainly, that we have seen that they have really influenced the global economy. And certainly we have realized that also...
Ebson, let's talk about the priorities. Let's talk about the priorities. It seems to me the priority for the Bank of Namibia right now is to deal with the currency pegged to the South African rand and less so tackling inflation. Why is that?
Our priority at this point in time is not really we are not defending the currency. What we as a bank, I think our priority at this point in time is to keep eye on inflation and also support the growth or the domestic economic recovery. Those are the key priorities that we are trying to do.
Let's talk about that inflationary picture. For the now, you're saying that the pressures will abate. We've seen the last month's inflation coming in at 5.3%. But interestingly, we're seeing costs of fuel, of food, of utilities rising. So on what basis do you say you think in the near term inflation will be manageable?
In our assessment, we have seen that the inflation outlook is benign and it's also low compared to last year, and also compared to the last time when we met, the inflation rate has come down. And this is largely because of food and non-alcoholic beverages inflation that has come down. Of course, there has been an increase in cost of utilities and fuel prices to some extent, but those categories has got a once-off effect. So looking forward, we still believe that the inflation is going to remain benign and is going to be contained.
All right, the drivers of growth in Namibia, basically the agricultural sector, mining, and we've seen some improvements in the recent retail sales figures that came through. But again, because you are largely an import-dependent economy, the whole question of imported inflation from South Africa and other trading partners is something to concern yourselves with. What do you think is going to drive growth going forward, and how are you going to mitigate against some of these other variables from your trading partners?
In our assessment at this meeting, we have seen that the key sectors, for instance, like agriculture and mining, did not do so well as we expected. Of course, some of the factors that contributed to that, it was because of some kind of production disruption that happened, especially during the wet season, during the rainy season. That has really affected the production when we compare it to last year.
All right, and now...
That has affected the production when we compare to last year, yes.
Okay, when we talk about the drivers of growth, how are you going to stimulate that growth? We're seeing credit flowing, at least an improvement to 11%. But, you know, people are still heavily indebted in Namibia and businesses are not expanding. So how do you expect to stimulate this economy?
The reason why we have decided to keep the repo rate unchanged at 6% is basically for that reason, to nurture the growth or to nurture the recovery of the domestic economy. We are so pleased to see that private sector credit has really gone up. to almost 12%. And especially that increase is on account of bank lending that was extended to corporate or to businesses. That is really the kind of situation that we would like to see, that the favorable or accommodative monetary policy it's supporting the business sector or is supporting investment in the economy.